Hey guys, Dave Hathaway on another deal day where each week we look at a new property in a new market to determine if it makes sense as an investment property. We do this to help build repetition, discover new markets, and become better investors. This week we're going to look at a property in Lubbock, Texas. This is home of Texas Tech. That is the university that Patrick Mahomes, the Super Bowl winning quarterback for the Kansas City Chiefs, went to. To put in perspective, Lubbock is about 5 hours away from Dallas, 5 hours away from San Antonio, and 5 hours away from Oklahoma City, Oklahoma. The address we're going to look at today is 3307 First Street, Lubbock, Texas, 79415. But before we go into the overall market, if you guys find this content valuable, we'd love it if you'd hit the subscribe button, press the thumbs up, as it helps us grow the channel and reach more people. So moving on to the overall market of Lubbock, Texas. So you're probably thinking, why the heck are you doing the market of Lubbock, Texas, Dave? And often I look at investing in real estate syndications, and one that I recently looked at was a build to rent real estate syndication. So it's somebody that comes in, builds a bunch of single family homes or townhouses, and they rent those properties out for a long term that you can invest in. So the syndication was located in Lubbock, Texas. And I actually wanted to compare two different markets, because one market I was thinking about investing was Lubbock, Texas. Another one was Lansing, Michigan. And I wanted to see which market was better, comparing apples to apples when I'm looking at markets and also digging into the market. So that's why I chose doing Lubbock, Texas. So that gives you an actual use case of how you can use these videos to review different markets to determine if you want to invest in them yourself or if you want to invest in with a real estate syndicator. So let's look at the overall market of Lubbock, Texas. This market has a population of 267,329. It's increased 1.2% over the past year, which is great. We always want to see markets growing or at least flatlining. We don't want to see them declining. So that's good. The job growth was 2.05% year over year. That is really good. Unemployment is 3.4%, which is low. It's under the national average. Average salaries, according to ZipRecruiter, are $45,000. That's great. Medium sales price of properties, according to Redfin, are $245,000 year over year. That's up 0.9%. And those properties normally sit on the market for about 36 days. The other thing, because I was looking at the syndication that's build to rent, I was actually curious to see how many building permits were pulled in this county. And when I was looking at it, I found that there was 2,321 building permits pulled over the past year. And if I look at the overall building permits in the previous years, they average about 1,000 per year. So this is more than double the amount of building permits. Why does that even matter? Well, we have a great market from all those indicators. Why did I look at building permits in general? If a bunch of new properties come on the market, especially when you're investing in a new single family home, and let's say in this instance, 1,300 more than usual are coming on the market, that's going to affect value negatively. So that means you have to have so much growth to support these extra houses that are coming on the market. Not only that, it also affects when you're looking at lower grade rental properties, because somebody that might be in the middle that's looking to purchase maybe a property that was built 20 years ago might go, I'll just purchase a property that's a new construction property that's only $100,000 more or $75,000 more. So you start competing, and when you increase supply, demand has to also increase, or else price will negatively be impacted. So that's why I looked at that, and I did find that number super interesting. I've never shared that number before looking at other markets, but that is a huge spike in building permits. Overall, I'm going to give the market a thumbs up. All those indicators are great, other than building permits, but that just shows that there's a lot of demand in the market with all the growth. So we're going over to the Google Street View test. And when I look through the Google Street View test, I see just a normal Texas neighborhood, sidewalks on each side of the street, single family properties, no trash, no hanging out. I'm going to give this one a super easy Google Street View test, thumbs up. Let's move on to look at the listing details. This property is listed for $110,000. It's a 3-bedroom, 2-bath, single-family property. Has 1,031 square feet, so kind of on the small side. No basement. It was built in 1947. In my rehab suggestions, looking at all the photos of this property, it's mostly been fixed up, but when I look at the front, it definitely looks bland. I'd put in some landscaping, whatever plants grow well in Texas. I'd throw some plants in there. And I'd also make that front porch beam that's really tiny. They always look odd to me. I just beef it up a little bit so it gives it a little bit more presence. Moving into the interior of the house, I'd install really nice frame mirrors like I normally do in the bathrooms. And going into the kitchen, it looks like you'll have to be installing stainless steel appliances throughout the kitchen. And you'll also have to put in a washer and dryer. So overall, you don't have to do much. I do also notice that they have hardwood floors. That's awesome. Hardwood laminate takes a lot more beating than carpet, so we don't have to replace it right away. It will last for a lot longer. So that's a pro when you're looking at rental properties. Our rehab budget on this one's going to be $5,000. There's not a lot to do here to get it up and ready and rented. We'll just put a $5,000 contingency in there for our rehab. Now moving on to the Cashflow Analyzer, and this can be downloaded if you go to the link in the description if you want to use the Cashflow Analyzer for yourself. But Zillow says rents in the area are $1,050. I think that's a little bit low. I think we can get $1,100 for this property, especially if we put in those nice little touches that I said. The comparables, Zillow said the property is worth $106,000. I actually think that's pretty accurate. It's listed for $110,000. We're just gonna analyze it at $110,000, but I actually would go on a lower purchase price or a lower offer here on this property. For property taxes, they're $1,525, which is decent. Looking at the monthly cash flow, if you purchase this one with all cash, you'd end up making $714 a month or 7.28% cash on cash unlevered return. So not bad. Then if you were to take out a mortgage on the property at 8.5%, which I know is high, but that's what the market is right now, you'd be making about $24 a month or 1% on your cash, which is really low. You can basically say you'll make nothing. It's going to be a break-even property, or you might even lose a little bit of money to be conservative. Don't love that. Overall, I think that you will get appreciation with this type of property. There's no basement. You don't have to worry about lots of flooding. So it could work as a long-term rental. It doesn't work as a flip because there's negative equity. You purchase it and it's going to take a little while to actually build up that equity. If I was really purchasing in this market today, I would look for a property that has a 1 or a 2 car garage, as they do look like they rent for a premium somewhere from $1,300 to $1,400. So you will get a premium for that. And I'm sure in the heat of Texas, people want that garage. Overall, I'm going to give Lubbock, Texas, the market a thumbs up. I'm going to give this property a thumbs down because with a mortgage, it doesn't make any money. So I'm going to go ahead and pass on that. But if you could find a property and negotiate a deal, maybe somewhere in like the $80,000 range, you can make it work in this market. But this is a desirable market. So you're going to be in competition with a lot of other people. Thank you for watching this deal day, and we'll see you next week.